We start here in just about, half a minute. And hopefully you can see my screen. This particular subject should be short and sweet, but I think it's an interesting question I get from people that, and unequally yoked, that's not really a fair way to put that. But what the bottom line is that it's when people that get married, one of them has either good credit and no income, or somebody has bad credit and has income, and the ways that we deal with that. So hopefully, as I go through this process and explain this loan kind of phenomenon, which happens a lot, then you'll get it. Okay, it is 6 o'clock. And so the title of this particular session we're going to do is Spouses and Mortgages. And if I offend anybody, I apologize. Unequally yoked. And what I mean is that some people have good credit, some people have bad credit. Sometimes they marry each other. One has income, the other does not, or maybe they both have income. All of those situations we're going to talk about tonight. My name is Mike Durr. I am the Kingwood Mortgage guy. This is information on me. My phone number is 281-348-9899. You can reach me through a couple different ways. Obviously, just call me on that phone. Also, I'd love for you to go to my website at kingwoodmortgageguys.com. And then finally, all of the recordings that we do for this webinar are put on homebuyerwebby.com. So you can always go there. You've got my email there. That is my personal email. You're welcome to send that information to me, at mikekmg@gmail.com. And Mike KMG means Mike Kingwood Mortgage Guy. So hopefully you see that. And anyway, just a note on here, I've been very fortunate to work with a lot of great customers, and they've gone on to give me reviews. Now, actually, this is an old depiction of those reviews. I think I'm up to about 42 reviews, and I want to thank everybody that has ventured to give me a 5-star review, and most do. So I appreciate that. I'd love you to search that out and see what other people say about me. So this is what we're going to cover tonight, and the first scenario we're going to cover is a husband with good credit and a wife with poor credit. In this particular case, we're talking about the husband has income, and then we'll talk about when the wife has the income. Scenario 2 is husband has poor credit, wife has good credit. Husband has the income, wife has the income. So we're going to kind of break down those scenarios just so you get a feel for it. And one of the things that I thought about is sometimes both people have good credit. One has a wage earner job and is paid with a W-2, and the other one is self-employed. And when you have a self-employed person involved in a loan, it just creates havoc in the mortgage business. One of the main benefits of being self-employed is that you can write off a lot of your income through your business. And a lot of people can live out of their business and pay very little taxes. It's one of the positive things of what's going on today. Now, how long that's going to be like that, I don't know, but it is. So it always creates kind of special circumstances. And as always, I always encourage you to contact me if you have a specific situation like that, not the forum to talk about that in an open webinar like this, but would love to chat with you and always encourage you to call me. My number should be right down there somewhere. So anyway, I look forward to that. All right, so the first scenario we're going to talk about in this particular case is husband that has good credit and income, and they're going to be doing a conventional loan. And so this is a pretty easy one. And this is, I find, about 50 to 60% of the time is what we do, is you just do the loan in the husband's name. The wife will be called a non-borrowing spouse. So the loan will be based on his credit and his income. And there's no need to pull the wife's credit in this particular case on a conventional loan. When the property is consummated in Texas, Texas is a community property state. So there's no negative effects for the non-purchasing spouse because she becomes, in Texas, 50% owner of the property as long as she's married to her husband, officially, technically, or maybe even not officially, even if it's a, what do you call it, anyway, where they haven't actually signed the documents, but they've been living as man and wife for whatever number of years. So this one's pretty easy. Conventional loan is where you can do this. Okay, a conventional loan. So what a couple of the critical parts of this is that you must have conventional FICO scores. So that means 660 and above. If you're 660 and above, you can do this. And some of the programs they have out there, they may even allow you to do them with lower FICO scores because conventional has been trying really hard to kind of keep up with what's going on in the FHA world. So anyway, good option. Again, if you've got somebody that's got good credit, good income, do loan with them, and they qualify for conventional credit. All right, next scenario. Wife has good credit and income. So in the first one we did, and it was a conventional loan. It was the husband that had the good credit and the good income, and it's easy. You just you do the conventional. In this particular case, the husband will be the non-borrowing spouse. Loan will be based on her credit and her income. No need to pull the husband's credit. Husband will be 50% owner of the property. No big deal. Again, you have to meet the criteria of conventional loans. Conventional loans criteria is a little tighter than the FHA loans, but it's not drastically so. So it should be pretty easy to do, and there's really no negative to doing a conventional loan in this manner. Okay. Now we're going to talk about the FHA. And the FHA is kind of interesting. FHA has a broader box that you can qualify for, but they treat husband and wife a little differently than the conventional loan. It's kind of interesting. So in this particular case, the husband has good credit and income. The wife's credit scores do not qualify. And maybe she has a job. So on FHA, what you do is you do the loan in the husband's name. Wife, again, will be a non-borrowing spouse. Loan will be based on his credit scores, but all the debts for both husband and wife will be considered into the debt ratio, and only his income will be considered. So you can see that's a little bit different, and what they're looking for, they call this the household debt for the purchase loan. But since the wife's credit does not qualify, we can't use her income. So what ends up happening is it puts a little bit of stress on the debt ratio, assuming that they have any, well, and particularly in this particular case, that the wife has any an abundance of debt. We will need to pull the wife's credit in this particular case. We do have to consider judgments and collections. They just have to be considered. If there are judgments, that's what you have to clear those up before we can do the loan. Good news, wife will be a 50% property owner, just like on the conventional, and that's based on Texas being a community property state. All right, very easy. Again, we're talking about FHA once again. Wife has good credit and income. Credit score, husband's credit scores do not qualify. So it's kind of a same thing. I guess it was when I was doing this presentation, I just wanted to make sure that it's not always the husbands that have the bad credit, or it's not always the wives that have the good credit. It's, it happens both ways. We see it all the time. So you just do the loan in this scenario in the wife's name. The husband will be a non-borrowing spouse. The loan will be based on her credit scores. All debts for both the husband and the wife are considered in the debt ratio. Only her income can be considered in this particular scenario. We'll need to pull husband's credit report. All judgments and collections will be considered, and the husband will be a 50% owner of the property. So you can see that based on the program that you choose or that you qualify for, there's a few different rules, and you just have to get your mind around it. what I wanted to do tonight is I wanted to make a clear presentation so that if you identified to any of these scenarios, that it would be very clear. But again, as usual, if for some reason your situation is a little different, there's a little tweak to it, obviously I'd like you to call me. My email is going to be, or my phone number is going to be right down here. I really encourage you to call me. Let's talk about it and work it out specifically so that it's comfortable for you. So, short session tonight, but I think it's important. Here's what we covered. Scenario number one was husband had good credit, wife had poor credit, and husband has the income, wife has the income on conventional financing. The second scenario was FHA, where the husband had poor credit, the wife had good credit, or the husband has the income and the wife has the income. So you can see it gets a little convoluted, but it gets clear when you're right there in the system. And love to help you. Again, my name is Mike Durr. I am the Kingwood Mortgage Guy. Love to hear from you. If you have any questions about this subject or any other subject that we talk about on the Homebuyer Webby, I'd love to hear from you. Again, my number is going to be right around here somewhere. Talk to you soon. It's Mike Durr.